JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 17th of January 2023. So yeah, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our jfdbrokers.com website, which you can always check out for more information about us. So guys, that's let's jump into the charts now. The first one I want to pick up here is Nikkei 225, and yep, as I said to you yesterday, it might end up being as a bit of a roller coaster ride. So one thing that's really catching my eye right now is the fact that look, when I previously talked about this this upside support line right here, drawn from the low of the 9th of March of last year, yes, it kind of is, it has been violated a few times now, and it seems like it's kind of ignoring it, but at the same time not. So it's like, for example, if it's ignoring it, what I'm saying ignoring it, it's just kind of, let's say it's not rebounding from it or anything like that, it's just kind of piercing it through and then going back up and then going back down. However, these kind of stops, these daily stops, where it ends the day, it's kind of either very near this line from above or from below. So in the same story is happening right now here. So on one side it's really ignoring it, on the other hand it's kind of still referring to it. So well, you know, you figure this out yourselves basically. It's like but look, I'm gonna keep this on the chart for now. The only thing is what else I'm gonna add here, because as what I'm noticing is that as you are aware that, you know, some instruments do kind of have their own kind of, you know, favorite patterns, I would say, and or let's say the patterns that you know notice on certain instruments the most. So in this case, Nikkei is kind of the, I think, the master of the triangles or you know, wedges or something like that. And yeah, looking at this picture right now, we can see that it seems like we are forming another little kind of a wedge triangle, let's call it this way. Look, if that's the case, if we are forming this small triangle here, the prevailing trend was to the downside. When then we're entering this formation, according to all the TA rules, it would tend to break, it should kind of break to the downside. However, I would say one thing which I always say is that wait for the confirmation breakout. Don't rush into anything. It might it might still kind of, you know, end up pushing back up here. So, you know, in order to avoid all that, just kind of wait for that clear breakout and then we can take it from there. The Shanghai Composites. So if you remember, also yesterday I talked about this one and I said that keep your eyes on this 3,226 territory, because, well, it might end up acting as a good area of resistance, and or the upper side of the potential range here. Well, I mean, looking at the picture here, this is exactly, it seems like at least exactly what's happening right now here. Look, if this continues to hold, if this area continues to hold, then yes, I will consider a move back down, especially if it falls back below the 200-day EMA. Then it could end up testing the 21-day and the 100-day EMA, and if it falls below this 3,153 territory, then yes, further declines could be possible. In terms of the news, we got some Chinese numbers from from China. The GDP numbers came out. Those were much better than the forecast, the initial forecast. So the Q-on-Q number actually ended up being 0 because the forecast was minus 0.08, and the year-on-year number was 2.9 against the forecasted 1.8. So in a way, everything is kind of looking great, spectacular. However, the problem is that it's still below the previous number. So there is still a slight decline and a trend that's currently kind of to the downside a little bit. So in terms of GDP numbers, so yeah, we managed to beat the forecast, but it's still below the previous number, and the previous number was a 3.9. So if the year-on-year number is 2.9, then the previous 3.9. So yeah, I mean 1% decline. So that's I would say a decent decline. But look, from the positives, industrial production year-on-year came out. Well, actually came out with the same scenario as well, beat the forecast, missed or came out below the previous number. So yeah, in general, that's kind of the the picture that kind of the Chinese unemployment on the other hand actually came out much better. So it came out at 5.5. The previous number was 5.7. This came at 5.5. However, the forecast was already like way higher at 6%. So, but yeah, this kind of came out as a nice positive in a way. However, the market's participants still are, I think, more cautious about the general sentiment. Yes, those positive numbers probably just helped it helped the market not to decline too much. But yeah, looking at this picture here, I would say I'm going to take a very technical approach, very careful approach here. As long as we stay below this area, I will consider a move lower, but probably I'll get a little bit more excited if we do fall back below the 200-day EMA. So the S&P 500, very quickly on that one. The S&P here, well, it was closed yesterday, as you know, so it's going to be opening up today. The cash index right now is getting a bit of a slide, so we're back below the 200-day EMA, back below this hurdle, the 3,990 zone. Look, it's not the end of the world. I mean, it could still drift back up, but for that, probably I would like to see a move above the Friday's high near the 4,004 territory right there. Look, if it pushes through the 4,000 mark already, then yes, this is from where I'll get more comfortable. I mean, I'll start getting comfortable from the 200-day EMA here, but just if you're looking for that extra confirmation, then yes, the psychological 4,000 level or even the 4,004 zone. Yep, if we break the 4,004, this will confirm a forthcoming higher high, and then my next target is the 4,101 territory right there. For the downside, I would like to see a drop below the 3,878, and then we could go from there. Nasdaq 100, very quickly on that one. So yeah, look, I mean, I'm still kind of considering this idea as the one which could be possible. So basically, a push further north, a test of this downside line taken from the high of the 28th of December. If we clear this downside line, then yes, this is where it could become a little bit more interesting because more buyers could join in here. But if we hold here again, well, guys, another decline here could be possible. If you're looking for something a little bit reassuring, I would say this is where I remarked my level here, the 11,000 mark. You could keep an eye on that one, or the 11,093 zone marked by the inside swing high. So you could start looking at lower levels from here, or if you're very adventurous, then maybe even from the 21-day EMA right here, and then yeah, if we drop nicely below it, then next target is the 11,093. If we clear that one, then yes, it could go further south here. So yep, and then we could take it from there. But at this point, I'm just observing this one because again, overall, of course, I'm bearish. Overall, we can see that apart from even this downside line, I mean, this downside line is kind of a part of a potential descending triangle pattern. But again, that needs more confirmation. At the moment, I am watching this downside line very, very carefully. The German index yesterday it pushed higher a little bit. Yesterday, yep, it managed to squeeze out some gains, maybe minor, but still some gains. However, looking at the cash index right now, I mean, we are seeing a bit of a decline, a bit of a correction. So yeah, if you're looking for some higher levels, I would say at this point the safer option could be where's that line? I will grab this one. The safer option is to wait for a pop above yesterday's high, which is around the 15,153 level. A nice good break above it would confirm a forthcoming higher high. Now, do not exclude a possibility of a kind of a false breakout here. So for example, it could go higher, it could create a new high, but then for January, and then kind of, you know, at the end of the day retrace back down and fall back below this hurdle, below this 15,153, and then it could move lower. So yep, I would say keep your eyes on this. Be careful here. So if we fall below the 15,041, or even better below the psychological 15,000 mark, if we fall below it, then yes, I will consider a correction, maybe even towards that 21-day EMA. Gold, so correcting nicely. So look, I mean, yesterday I've redrawn this. So if you remember, yesterday I've drawn this this Fibonacci here. We did retrace that 23.6. Then we kind of just started jumping around. Then I decided, hey, I think it's time to adjust this, and I've drawn it this way now. So the 20th, we are kind of approaching now that 23.6. Look, once we approach this 23.6, I think I'll, depending on the price action, maybe I'll start, you know, moving my Fibonacci here even lower, because look, the 23.6 is perfect, nice, sitting perfectly here near this 1879 territory, which is the high of the, or the highest point of June of 2022. So good potential target in a way, but again, let's not rush into anything. Let's go slowly, step by step on this one, and first let's aim for this 1904 zone, which I believe we came very close to testing it, but now we're jumping back up. So look, I think what I'm gonna do here is I'm gonna just put this arrow on top here, and that's going to be the barrier for some upside. Let me just move this a little bit away. So yeah, for the upside, that's going to be this 1929 level. For the downside, I think all is good here. I think I can get rid of this line. So for the downside, well, I mean, I would say, for at the moment, I'm kind of aiming for that 23.6% retracement on the Fibonacci, if I draw it from here. But if we start clearing this area, that 23.6 here, the 1904, and then we fall below the psychological 1900 level, then for sure I will start using something like this, where maybe, like I said, this 1879-80 zone, approximately around there, could become a good target, because it also kind of means that it's the 23.6% retracement on this Fibonacci, you know, if you draw it this way. But yeah, let's go slowly. Let's not rush into anything. At the moment, I'm watching this area carefully, this 1904 and the psychological 1900 level. Now, WTI oil, guys, very quickly on this. Look, this one declined yesterday, and I keep on talking about the same thing here, and to be honest, I'm not really going to do anything. I'm going to just continue observing it until I get my pop above the 82 territory. If I get that, great, I'll go higher. For the downside, I need to see a drop. Well, this is the thing. For the downside, I would like to see a drop below the 76.83. If we get that, then my next target is not the 72.50, although I would like to see it, but my next target is going to be this upside line taken from the low of the 9th of December, which could get tested. So if you're looking for some lower levels, then probably the option is to wait for a drop below the at least below the 21-day EMA, and then below that 76.83, which is marking the inside swing low of the 29th of December and the inside swing high of the 9th of January. DXY, the dollar index, still stalling. Yes, we had a bit of a recovery yesterday, but to be honest, that's okay. The main thing here when I'm watching is this 101.30. Look, I'm not going to spend too much time about this, and I talked already about this in my previous videos. So if we do remain somewhere below that 21-day EMA or below that 103.45, yes, I'm going to continue aiming to the downside. BTC USD, this one is quite interesting. So of course, Bitcoin, as you know, it did rally nicely. And look, I mean, if you remember, a while ago I talked about these tentative trend lines, which we managed to break, and that's great. And what I said, that if we climb above it, above those, and we climb above the 21-day and the 200 and the 100-day EMA, my next target is going to be the 200-day EMA, which we managed to reach perfectly. Here we also have that 21,000. Well, let's round it up to 500. So 21,500 level. We're currently sitting below it. That's kind of a very important barrier. If we clear it, then we could go higher, guys. But at the moment, I'm being very cautious about this because, again, it's the question here is, you know, is this the point from where the crypto will start rallying nicely to the upside again, you know, or will it actually be something else here? Anyway, long story short, I would say that look, if we do clear this, I'll take a very simple and very simplistic approach here. If we do clear this barrier, the 21,500, I will go higher, but not significantly higher, maybe towards that psychological 30,000 mark. AUD JPY, so yeah, looking at this picture here, AUD JPY is kind of sitting nicely here, still below this hurdle, below the 89.82. I talked about this level, and I said that if we stay below it, I will go further south towards this upside line, taken from the low the 20th of December. Well, at the moment, we are not really going lower. We're retracing, but maybe this is a good situation for the sellers to step in again, the ones that missed out this rally. So if we continue to trade below this 89.82, I will continue aiming to the downside. For the upside, I need to see a break of this downside line. AUD USD, guys, so this is what I talked about yesterday. Look, we are getting that hold up below this kind of upside line connecting the tops, which, to be honest, I mean, it could be part of a channel or a rising wedge, but we cannot really say that because we have a bit of a gap here. I mean, of course, some of you probably are drawing it this way, or something like that here. You could, I mean, I would probably be the first person to start shouting about, you know, potential rising wedges and everything like that, but I really don't like this one, and because I do have a lot of empty space here, and that's why this rising wedge is not really something that I'm really, you know, kind of very happy about or something like, or very, very, very excited about, because it's not really that kind of type. However, you know, market always presents us with different opportunities, different scenarios. So at the moment, I would say it this way. I'm going to keep it simple, and let's say I'm going to, for the downside, if we do fall below the 0.6950 zone, I will go a little bit lower. For the upside, I will wait for a pop above the 0.70 territory, and then I'll go to the upside. And ZD-CAD, very quickly on that one, guys. I haven't looked at this one for quite a while, but look how well this played out. Previously, I talked about this downside line. taken from the high of the 24th of February. So we managed to break it nicely. Look at this fantastic rally which we had here from after finding support near near the 0.7626 level. We rallied all the way towards the 0.8088 territory. So we found a good resistance near the 0.88. We retraced, and out of curiosity, my favorite Fibonacci, let's see. Okay, so we kind of started, we retraced to the 23.6. Yes, we overshot it a little bit. We kind of found support near the midpoint between the 23.6 and the 38.2. We find the support in here in the midpoint, roughly around there, and we rebounded. So now we're currently oscillating just around that 21-day EMA and the 23.6. And by the way, the 23.6 is kind of near that 21-day EMA here. So in a way, at the moment, if you're looking for some, let's say, higher levels, it's going to be a bit of an interesting one, because yes, on one hand, we are rebounding from that 23.6. We are pushing through this short-term tentative downside resistance line, and yeah, in a way, everything is kind of leaning a little bit more to the upside. However, I would prefer actually to wait for a push somewhere above this territory, the 0.8624, 25, something like that, and then kind of consider maybe a move back to that 0.88 level. For the downside, well, to be honest, I really don't like this whole area here, because for me it's very tricky. Ideally, I would prefer actually to wait for a drop below the 100 and the 200-day EMAs, and from here I would like to consider a move lower. But again, I do understand we could be missing out on a lot of territory, so maybe we could start looking at some lower levels from around here, from around the 0.8432, and then take it from there. USD JPY very quickly on this one, and yeah, so similar as the dollar index, it is retracing a little bit right now, but not significantly. So look, I'm going to stick to the same game plan. As long as we stay below this 130.40, I will continue aiming lower. So at the moment, what I'm seeing here is a bit of a retracement, which I'm considering as a temporary correction before another possible leg of selling. If we break the downside line, now this is where I need to adjust my arrow here, and if we break the downside line, I will consider a move higher. But if you remember previously, I talked about this 134.50. Now, given that we are moving a little bit more to the right, I think that the upside scenario could come just on a break of this downside line and a push above the 21-day EMA. My next target then, 134.50. If we clear that, I will go further north. USD CAD, very quickly on this one. A picture here. Look, it's an interesting one. It's currently stuck here in between these two levels. I mean, the same analysis is valid. I spoke about this before. So 1.3357 for the downside, 1.34 let's round it up, 60, 1.3460 for the upside. Simple as that. USD CNH. So of course the Chinese numbers, Chinese data that came out. As I said before, I mean, yeah, the market is not really seeing this as a very positive thing, and you can see here we are pushing to the upside. The offshore Chinese yuan is devaluating a little bit, but of course after strengthening from around in the end of October, it has been strengthening quite significantly. So DXY, for example, right now is pushing a little bit to the upside, but look, USD CNH is pushing much more, so it's kind of not really the dollar strength that's driving this. It's actually the Chinese yuan weakness that is just driving this kind of stronger move to the upside. Look, from the technical perspective, excuse me. From the technical perspective, we could go a little bit higher, because look, we have this tentative short-term, tentative downside resistance line, which kind of almost coincides here as well with the 21-day EMA. So we could go a little bit higher, test the downside line, find a hold up, and then drift back down. If you're not really comfortable with the downside scenario from that downside line, then you could wait for more confirmation from this on a break of the 6.70 territory, roughly. I would say yes, 6.70 territory, a nice good drop below it would confirm a forthcoming lower low, and yep, further declines could be possible towards that 6.61 zone, and then so on and so on. But for the upside, well, a break of this downside line is needed. A push up of the 200-day EMA is needed in order to go higher on USD CNH. GBP NZD, guys, very quickly on this one. Right. Yeah. Here we're still within this falling channel. Look, I mean, I talked a lot about this, and I'm going to keep on mentioning this pair in my videos just because I'm waiting for that breakout. And look, I mean, we came very close to having that breakout. We tested the upper side of the falling channel, and we drifted back down. We drifted back down, and we're still stuck in here. Look, for the downside, I need to see a drop below the 1.8958, somewhere around here. For the upside, I just need a clear breakout here through this upper side of the falling channel. GBP JPY, this one's interesting as well because look, I mean, we are now below this inside swing high of the 26th of September, near the 157.22. It's currently giving us a good hold up. It's acting as a good area of resistance. In order to go lower, I would say wait for a drop below the 155.36. A nice good drop below this would confirm a forthcoming lower low. For the upside, this is the tricky bit. So overall, you can see that we have this short, well, actually more of a medium term, I think, medium term. No, still short term. Short term downside resistance line taken from the high of the 31st of October, which could still be valid. Now, in order to consider a move towards that downside line, we need a break, I think, through this barrier here, this other downside resistance line taken from the high of the 28th of December. Now, if we do get that break, then yes, I will consider a move towards this other tentative downside resistance line. So yeah, and then we'll take it from there. All this area here will be neutral one for me because I don't really like this, and it would be a little bit of a gamble. GBP CAD. So good area here, the 1.6437. I need a clear break through this barrier in order to go higher. For the downside, this is where I'll redraw my level, and I'm going to mark this one instead, the current lowest point of January. A drop below the 1.61 territory here would be required in order to go lower. Simple as that. And finally, EURUSD. This is what we're having right now. We're getting that little correction, and look, this little correction is still fine because I think, well, these last three candles here are within the this long one. So what does that tell us? That tells us that this could act as a nice potential bullish flag. Now, if this is the case, yes, we could go higher in that case. But I think that what I would like to see here is a break above the 1.0874, and if we clear that, then yes, I will go higher. This will confirm a forthcoming higher high, and my next target is the 1.0936 or even that psychological 110 zone. For the downside, I would like to see a drop at least below the 1.0736 at the end, maybe even actually a drop below the 21-day EMA just to kind of strengthen that downside scenario. But until then, I'm just observing the price action and yeah, keeping it simple. We did get the numbers right now from Europe, from Germany. The CPI figures came out, but they're all in line with the expectations. So no, nothing kind of interesting there. But yeah, it went a little bit lower. But overall, there is a decline in the CPI numbers, in the German CPI numbers. Yeah, but again, it's in line with expectations. You can check the economic calendar for that. But yeah, today we're getting the Canadian CPI numbers, so keep that keep your eye on the Canadian pairs. Oh, and by the way, also the German ZEV numbers are coming out, so that's going to be quite interesting as well. Let's see how that's going to play out. But yeah, keep your eyes on the economic calendar today, guys, and of course have your stop losses in place. Right. I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate your time, guys, your views, your likes, your comments, everything. I really appreciate that. So thank you in general for the previous ones, for the future ones. So yeah, if you want to catch me tomorrow morning, as always, my Traders Espresso. That's 7 o'clock GMT time. For now, have a beautiful trading day, and I'll see you tomorrow. Bye-bye.